Uh, all right, guys. Good day. I'm happy we came from this side. Um, I don't want the video to be long, just as short and quick as possible. Passing the rightful message. Yeah. The last video I did was showing analysis of on the 20th of January. So today I'll be doing 21st of January, showing you what the market have done and how we got our entry and our exit so far. Yeah, quickly let me show you the our trade journal so far for this month has been a rough month, but we are still around break even. We believe that the last week of the month will be the magic. So you notice we had a profitable week first week, although it was just one day. So the last in this week, second week two and week three was a bit rough, very rough. So the fourth week was good, and we believe the last week that will be the magic to give us a profitable month, because I believe I usually do better towards the ending of the month. So I'm sure of a good outcome in the last week, putting in the rightful discipline. You see the rightful result. Yeah, it's been a good week this week. Yeah, we had almost every day profitable. Even this very day was profitable. Just I don't know why it's showing that. I think some of the results from here entered here and all that. So it's good. So let me just show you quickly what we've analyzed in the week from 21st and how we observe the market. Now, as you all know from my previous video, I usually trade based on key zones. I looked at the market with the eye of key zones. I see the market creating key zones at every move it makes, and that's the basis, that's the structure of my system, my approach to the market is just based on key zones. And if you start looking at the market based on key zones, it saves you a whole lot of stress. It helps you a lot, your psychology. You know when to exit your trade, you know when to enter the trade, and it's going to help a lot. That's just the real truth. You don't really need any indicator. Your key zones should be your indicator. Once a key zone is disrespected, you know that there are possibilities that the trade is about to reverse, and you either take partials and you wait for a confirmation for the reversal. So that's just the way I trade. Very simple and clear. And I like the fact that gold respect key zones. I trade only gold. I don't trade other pairs. I don't know about other pairs. And if you're a beginner, my advice for you is to find a pair that you resonate with and stick to it. But obviously, I will surely recommend gold, because gold is something that respects structures, respects key zones, and it respects key zones a lot, and it's something that you can analyze and you see it go in your direction. So I don't know why you're not trade good, and it's a very volatile pair. It gives you many opportunities in a day, many opportunities. Now left for you to find the best opportunity for that very day. So let's quickly look at on the 21st what happened in the market. Yeah, now if you notice every marking I'm doing them from 1 minute time frame. But if I should show 1 minute time frame, you might not see the full view of what the market is looking like. So that's why I decided to switch to 5 minute time frame to show you what I'm doing in the market. Now, if you notice, every marking, this is me marking a break and a retest, push, a break, this is a key zone, a break and a retest happened here on 1 minute, a break and a retest happened here on 1 minute, a break and a retest happened here on 1 minute, a break and a retest happened here. Are you seeing how much the market respects break and retest? So why are you not trading break and retest? That's the best strategy out there. Don't allow any mentor to deceive you. That's very true. Most of these mentors you see take trade just by drawing line, observing what's happening. And most of the times it's break and retest the trade. Some people trade just trend line, they just draw trend line and they trade it. And you see them make over $100,000 from it. Why? The market do respect those lines. The market respect those lines. It's not left for you to observe those lines. And one thing about the forex market is that for gold, I might not know for other pairs, is that every day the market presents a pattern to you, it's now left for you to use your system, your approach of the market to study what the market is presenting to you for that day. If the pattern the market is presenting to you for that day is not clear to you, if it's something that is not aligning with your system or with your approach, it means you are not supposed to take a trade at that moment. Because when you are not understanding the pattern the market is presenting to you, it means you are likely to be on the wrong side of the market. So the market doesn't come the same way every day. That's why you need a system, an approach that is flexible, that can be flexible to an extent, that can give you an opportunity to be able to arrange what the market is presenting to you. There are days that your system might not be able to align with what the market is presenting to you. Then you know that there's no trading there. Are you getting it? So just like now the market is respecting structure, showing me that a break and a retest is happening, and that the market is obviously bullish, showing me obvious bullish movement. I took this buy on Asian section. I made some money from this buy, which I wasn't supposed to, but I just did it with small lot size. Naturally, I should trade only London session. But these days, it's very tempting when you wake up seeing people have made lots of money on the Asian section, because gold, I don't think the idea of seeing gold only work or is very volatile on London and New York session, I don't think it's really true these days. Gold can move 1,000 pips on the Asian section and you wake up. And one thing about gold is this: the fact that I've been backtesting gold, I've had at least 3 years backtested data on gold. I've studied the way the market moves. When the market is very volatile in Asian section, when you see gold move this kind of amount of pips from year to year, like over how many, maybe 500, 1,000 pips, be very sure that London session will be consolidated. And that's what happened here. If you notice, after this whole long movement, what happened in London session, you see consolidation. Too many persons took loss in this point. At this point, that's the real truth. So sometimes it's very tempting to just stick to your time frame, but that's what discipline is all about. You need to, if you've not had some lessons from indiscipline, you will not be disciplined. So what happened on this day? I took this trade, I made some money from it, and another break and retest happened here. Kept on buying. Later on, the market decided to reverse at night, and towards morning, decided to reverse a break and a retest, bringing it down to the downside. And when it came down, it did an inducement here. This is an inducement because obviously it didn't get to this next key zone. Are you getting it? This is the next key zone. It didn't get to the next key zone. So I'll call this an inducement, showing possible sell. Take note, it didn't stop in the next key zone. It stopped at an inducement zone after giving this break and a retest to the downside. So this is like an inducement zone, showing possibility that there's still more sell. The reason why you should still expect more sell is that we still have several break and retests here. If this was the beginning of the trend, are you getting it? If this was the beginning of the trend, then you could say, okay, that inducement can be like an inducement that can give you a break and a retest to the upside. So the way I do my trade is this: when I'm in a trend, from the beginning of the trend, I tend to observe the structures creating that break and retest to the upside. Once one of the key zones is being taken out, it shows me, it signifies that okay, there's likelihood of trend reversal. So if I am on this trend now, for instance, and this 1 minute key zone is being taken out like this, just for instance, this way, it's being taken out. Either I take my partials at that point, if I've not attained my full take profit, I'll take partials and then I'll set break even, because once it happens, be very observant. There are likelihood that it will come back to your stop loss or even end you in loss. I get to the point. So you take note of what the market is doing. Once a key zone on 1 minute is being taken out and I'm seeing a break and a retest to the opposite direction, I will set my stop loss at break even and I might take partials immediately. And that's what happened here. This trend has been moving. The moment this happened, then it came down to this point, and after I got to this point, it started showing bullish sign on 1 minute, giving me a break and retest. Naturally, I will not take this trade. You know why? Because The reason why I will not take this break and retest now is because this is not the end point of this trend. If it was coming from the end point, which is from the beginning of the Asian section, now this is Asian section, if it was coming from this point and it got to the ending of the point and it give me a break and a retest, I will buy comfortably. But at this top, I cannot buy. The only reason why I will buy is this now. After it has done this inducement, it gave a break and a retest, right? Going to the upside. The only reason why I will buy is this now. If I see an inducement again in this point and a break and a retest, that's why you see I did this indication saying I expect the market to do this. If the market is going to be bullish by any chance, then because this is like an all-time high, and from my lessons, from what I've learned so far, it's very risky to be selling gold at all-time high. So you shouldn't sell gold at all-time high. Even though your strategy is presenting sell opportunity, you might just be the liquidity. Even if your system, your approach is presenting sell opportunity, just be careful to sell good at all-time high, because most of the losses you see me I had in the week 2 and week 3 were me trying to sell good at all-time high, and I had to learn from that lesson because it happened to me also in December and November. So I was still looking up for a buy, even though I've seen the market looking like the change of trend, but I was still looking up for the buy, even though I was seeing the sell from my strategy. Now this is a break and a retest to the upside, a break and a retest to the upside. Now from year to year is an inducement zone, and this is the top part, the beginning of the downtrend. Like I said, at the beginning of the downtrend, if you see an inducement happen at the beginning of the downtrend and you now see a break and a retest to that very downtrend, if the market can decide to come to induce that beginning of the trend and then give you a break and a retest to that very downtrend, then that's 100% sure confirmation. But you still need to be careful to sell gold at all-time high. There are times whereby that sell will happen, but it won't happen for too long, because you know gold is obviously bullish. So you selling is risky, but even if you are selling, be sure that it's not going to last for too long. Just take profit where you feel the trend want to turn to the upside again. So what happened here? I missed this trade from this point. I was supposed to take it because this is like my sure confirmation showing, okay, after the inducement happened, the trend decided to break this very break and retest that was happening to the upside, decided to break it, a more confirmation for me. And then what happened here? I took a sell here. I took a sell here. I think I made sell from here. Yeah. So it decided to do this break. Now you see this break that happened now. Look at it. A break and a retest. I was waiting for this though. I was waiting for an inducement here. Now I'm remembering everything that happened that day. I was waiting for an inducement here. The market did not bring this inducement. Rather, it came to respect this key zone and retest back. Now, part of my principles is that when the market is coming from a key zone, because this is a key zone now, it came to respect this key zone and it's coming back, you don't sell here. It's very risky to sell here. Why? The reason why it's risky to sell here is because this market is coming from a key zone, 1 minute key zone that you have highlighted here. So how do you sell here? You don't sell here, you wait. You wait for an inducement. You wait for this retest to happen, and then maybe if you want to even sell, an inducement should happen, and then a break and a retest to the downside before you sell. You don't sell here. So what happened? As I noticed this, I was still waiting for the market to come down to this point to give me a break and a retest for me to buy. So sellers were all present here pushing the market down. Buyers were also present here pushing the market upward. You need to start seeing the market in terms of what? Buyers and sellers. Know where the buyers are, know where the sellers are. Try to observe who won the market between the buyers and the sellers. If you start seeing the market that way, you can never be disappointed when your analysis did not play out. You just understand that, okay, it means sellers won the day. It means buyers won the day. It means I was actually wrong. sellers won the day, buyers won the day. So you will not be disappointed when the thing did not go your way. It just means that maybe the people who you were thinking will win the day, or the people who you were feeling are going to be in charge of the day, they didn't proceed properly. That's just it. When you start seeing the market that way, it becomes very clear for you. So now what happened? Where I was expecting inducement to happen, inducement did not happen. It was taken out. It was completely invalidated. It didn't give me any inducement plus break and retest to the upside. So that's showing me that there's an obvious sell now. Now what happened? Now look at this. It break here and it came here to give me a retest here. A break and a retest. I was supposed to sell, which I did. I sold here. The stop loss was looking too big, about 200 pips. Now, and based on I look the market from 1 minute, I tend to know when my trade is looking invalidated and I leave the market. So what happened here? When I noticed this sell here, I was supposed to sell here. The market gave this bearish candle, but it didn't respect it. Why? I know that two things can happen. If it's not respecting this very one, that means it can come and respect the next one. So this is what happened. The break and the retest that I was expecting to come down here, it didn't happen. Rather, the retest was happening at this point. And if I should want to wait for the retest to get to this point, my stop loss is looking too big already. How am I sure that the retest will happen here now? Two things. The retest might not happen. It might be coming back to do inducement at this point to give me a break and a retest to the downside. So that's why one thing about trade is you need to understand your strategy very well to also know how to manage it. There's something called trade management. Know when to exit, know when to still stay in the trade. Because there are times whereby you might be expecting, okay, if this retest did not happen here, the next retest that is supposed to happen here will happen. But that next retest will not happen at that point. It could be leading to go and forward an inducement. Do you want to have 400 p stop loss? I'm not a swing trader. How do I do that? I had to exit the trade at this point in small loss. That's the wisdom. I exited in small loss. The trade came down to this point, respected this point, came back again to give another retest here. This is an entry. This is an entry. Yeah, decided to come down here, give another retest here, and you could sell from here to here and make some money. At this point, buyers took over again, but I know that sales should still continue because the reason why sales should still continue is because this is not the end of the trend. This is the end of the trend. So it came back and respected this key zone. Took this point out, but respected this very key zone and a massive sell. I'm not sure I made money from this. This was Wednesday. I don't know. I can't remember if I made money from it. There are times I might take a trade, but I won't put this whole thing right here. Just observe the market. Are you getting it? What happened? The market kept on, got to this point and started creating a break and a retest to the upside, showing bullish momentum. I kept marking it. So market switched over again. So if you notice, if you trade with key zones, you can catch as many trades as possible, but you have to be very careful to select the good trades among all the trade. This is Thursday 22nd. The market did this whole thing, create this gap, did this break and retest, this point, did this inducement. So every day, like I said, the market presents a pattern to you. You try to be observant of what the pattern is showing, and then that way you can catch the right move. So look at this. I sold here. I dropped it on my Telegram. I would advise you guys to check my Telegram on the link below. Check my Telegram, and you can be getting the right full update and analysis every day as I'm dropping it. You'll be seeing it live as the trade is playing out. I took this sell here. I made some money from this sell. It reversed back, took me out at break even. I sold again, made some money. Then the buyers took over from the day. I was waiting. I noticed two things. I told myself two things. This is a markup I had here. If this is being taken out, that means buyers has won the day. I know sellers are not present anymore. I was expecting the market to sell to the last inducement, but it didn't sell to the last inducement. So, but two things are involved. Even if you want the market to sell to the last inducement and it hasn't gotten to the last inducement, but sellers are present here pushing the market, but you notice the moment sellers are being taken out, you know that buyers are active. What do? You take advantage. If you still have an opportunity to, like, you might have a certain number of trades you have to take in a day. So, but if you know you've not exceeded the number of trades you have to take in a day, and you are seeing that sellers are no more present in the market, then you take the next opportunity. Now, look at the way I told my the discipline I've decided to stick to is that I see the market in both buyers and sellers present in the market. So I told myself, to avoid taking much trade, to avoid over trading, I should be taking at most maybe 2 to 3 trades in a day. 2 to 3 trades in a day. So the first trade, either I'm selling or I'm buying, and I tend to sell my stop loss at a point whereby I know that, okay, if this trade should take me out, I will know that sellers are no more present. The first time I'm selling for that day at the beginning, and my stop loss is being hit, I will know that sellers are no more present. Buyers have taken over the market. What do? I wait for a clear opportunity to buy, and I'll buy. If I don't see a clear opportunity, I will not buy. So to avoid over trading, you set or place your stop loss at a point whereby when the market takes you out, it's being invalidated. Now, when you are buying, which is your second trade for the day, and then you are buying, and then you end up being taken out again in stop loss, it means what? The market is consolidating. It means nobody is winning the market at that point. Maybe buyers and sellers are indecisive. What do? You wait, stay away from the market. Maybe till the next session, you can then see what the market is presenting. If there's a very clear opportunity, that should be your third trade for the day, and then that is for the day. So that's the way I've decided to position myself, and I'm actually sticking to it. So far, so good. In short, this week was a very good practical example. So what happened here? I noticed a bullish movement here. There's a break and a retest happening here, but I didn't buy. I was still on my sell, but I set my break even because you have to have your trade management in place. So I had to set my trade on break even, noticing that the market is pushing a bullish movement. It took me out at break even. It did this break and a retest. Have you seen it? A very clear break and retest. And I took the buy. I made money from this. Now my problem that I'm trying to fight is the fact that sometimes I tend to be taking partials, all those partials that you didn't plan in your trade plan, make you not make enough money as expected. Imagine how much this trade moved, but maybe at this point I already took some partials, If you had the courage, the patience to hold your trades, you will make good amount of money. That's the truth. Sometimes, even though you might close one position, the remaining position, the patience to hold it to play out very well. So you see this whole bullish movement. Now, what did you notice here? This is a key zone that was being taken out. I was expecting maybe the market might sell, but the next key zone was being respected. It gave this bullish movement, So it's normal. Sometimes it's normal for your key zone to be taken out and the next key zone to be respected in good, most especially when you are looking at a bullish key zone. It's normal. Don't just feel because one of the key zones is being taken out, it means the market want to sell. No, wait for a proper sure confirmation for sale. Like maybe you see an inducement and all that. So this is Friday. We made good money on Friday as well. You see this whole bullish movement. I took this first buy here. Initially the market was looking confused. At this point, I told them in my group that the market is not clear, so I'm not trading at the moment. I saw this big sell here. I was like, okay, the market is now showing me. It came down here to do inducement plus a break and a retest to the upside. So I noticed, okay, I can buy, and I gave one break and retest plus another break and retest. So I was expecting, okay, since it has shown two break and retest to the upside, then it means buyers are fully present. Even though this is not the last inducement of the trend, this is not the last inducement. The last inducement is down here, so there are possibility the market might not get down there. If it's presenting two break and a retest to the upside, you have to understand that that's where the market is ending. It's not going to go down further, so you need to take advantage of the opportunity. I was able to manage my risk properly in this point when I noticed the trade was reversing. When I noticed it has broken one key zone, I reduced my losses by half and left the other one to, I held the other one to this point. It looked like the market just came to do induce me. I want to continue to buy. I was like, okay, what happened? I stayed patient. It did this break and a retest. After break and a retest, I was like, I don't want to be caught doing this buy in the same point, because this is showing me like for this thing to have taken me out, maybe buyers are not present anymore. But it did this break and retest. I wasn't tempted to enter. I was tempted, but I didn't. I had to leave it. So what happened? It came and induced the very buy in the very break and the last break and retest that was forming a new trend. When I saw this is an extra confirmation for me. Then after inducement, I now saw a break and a retest. That's where I got my confirmation entry, and then I bought from here. You see another break and retest happen here. When this break and retest happened, then later on it was disrespected. I closed one of my position in break even, because this is like a sign of maybe the trend want to reverse. I had to close one of my position at break even. I left one, extended the stop loss to the appropriate points, and surprisingly, gold was just respecting upward movement. I said, okay, this is like you have to create an avenue to accommodate the market manipulation. Create a management that can help you accommodate the manipulations that are happening in the market. Are you getting my point? So noticing this, I noticed this break and retest. I added one position, and then that was how I was able to make about close to $2,000 for the week. So thank you guys. I see you on my next video. I'm sure gold is surely gonna get to 5,000 and maybe push further, but you have to be observant and don't be caught up when the market start reversing. That's the real truth, because anytime we will see a very massive retracement. So you have to be very observant, know when the market has changed its leg, and join the bandwagon to make money from the next movement. See you guys next week. Have a blessed week ahead, and don't forget to subscribe and share my video. I love you.